Welcome back, traders. We're going to be looking at a fantastic third-party resource which will really help you out a lot in trading. There are a lot of sites out there which claim to give you all the news and all the information that you need to know at the low cost of just $10 a month or $20 a month. 9 times out of 10, those sites are just pulling the information from somewhere else and sending it off to you. I know a few traders who do have a subscription service and they do all of the technical analysis themselves, and sometimes they use a third party to help out and give assistance there. And those ones are great. But a lot of these sites where they just kind of spam you and they're just trying to mass signups and that sort of thing, they are really just pulling information from sites like investing.com. But now here's the amazing thing about this. Back in the day, before we had wonderful sites like this, we would have to have a separate monitor or TV up playing Bloomberg's to keep an eye on the news and then say watching CNN to see if anything major happens. What investing.com has done is they've created an economic calendar. So when you go to investing.com, have a look for economic calendar. Go ahead and click on it. Once that page is finished loading and all the adverts are finished loading, go ahead and look at current time, click in the drop down and select the time zone that you're in. Now down here in South Africa, we're in GMT +2. You can select Harare, Pretoria. This will make sure that there's no daylight savings time settings. And by default, it'll always show you what's on today. Now what makes this site so nice is it lists all of the expected news events and outcomes from various countries around the world, the major currency pairs out there, and it gives us the previous value, forecast, and actual. But even better than that, it gives us this IMP, which is short for importance. So if we see something that has one bull, it says low volatility expected, which means we wouldn't really see this news event as moving the markets very much. When we look at something like this, where we have 3 bulls, then we could expect this to move the markets a lot. We have high volatility expected, and obviously in between we have 2 bulls, which is moderate volatility. So what you can do each morning, before you even start trading, is you have a look at the news and see what major events are coming out. Now trading the news is very different to how a lot of people think it is. A lot of these websites say you trade the news by sitting and watching, and then as soon as you get information you quickly jump in. And we find that's not so much the case, because as the news event comes out there's so much volatility that very often will trigger your stop loss or your take profit randomly, and then it starts feeling a lot like a gamble. But we do find that the 3 bull events can change the direction of the trade completely. Now as a forex trader trading for profit, I've said many times before that we can make money when the markets are moving up or when they're moving down, but if the markets are moving sideways, we can only lose money. At the very top of the economic calendar, over here, they will tell you if any of the currencies that they're looking at are on holiday. If you see the United States is on holiday, then you are on holiday. Don't bother trading. The markets will be very quiet, and the only guys making money out there will be the brokers, who are watching all the new traders buy and sell and desperately try to get a trade, and nothing really works. You might get lucky and get a trade, but generally just don't do it. If you see another currency is on holiday, let's say the Japanese yen, they're on holiday, then avoid the Japanese yen, whereas you could still be trading the euro dollar, pound dollar, other things like that. Now the most important thing that we're looking for is we don't actually care what the outcome is. What we care about is the difference between the actual outcome and the forecast outcome. If the forecast is negative, let's say average earning index is sitting at 2.4%. If that's not considered good, then it's already happened. All the economists and investors have already placed their trades and already invested as much as they're willing to in the British pound based on what is forecast. But now if the actual comes out significantly different, we will see a big spike in the market. For example, at 10:30 this morning, we saw that we had a forecast of 7.5k and it came out to 19.4k on the claimant count change. If you'd like to know more about it, you can just click on what it is. And here it's telling us the claimant count change measures the change in number of unemployed people in the UK during the reported month. A rising trend indicates weakness in the labour market, which has a trickle-down effect on consumer spending and economic growth. You find a lot of countries, the unemployment rate as well as the average earnings rate really makes a big difference to how much faith people have in that economy. So that's understandable why it's a 3 bull. And this is a massive difference, which means that the British pound should have taken quite a big hit. Now, what a lot of groups will tell you is when you see negative news coming out on the pound, that means you should immediately go and sell pounds. We find that that does not work. This might take effect, and very likely it will take effect, but it won't affect the British pound immediately. It's only when the really big players in the market start closing out their trades and start moving things around that it will start taking effect. You will see the market jump around like mad as the news event comes out. You'll see larger than normal candles, you'll see volumes increase, everything like that as people are panicking or desperately trying to get in there. But we won't see the British pound get a knock immediately. Sometimes you do, but most of the time it takes a while for that to happen. So let's have a look at what happened to the British pound this morning. Now the broker is 1 hour ahead of us, so it would actually be at about 9:30. So this is where the candle came in, and it did take quite a knock immediately, but it did not take long for that knock to come back. And it continues to go up. And this is the British pound versus the US dollar. So when the chart is going up, it means the pound is getting stronger than the dollar. So we can double check and see if anything came out for the dollar, and nothing did at that time. We only have dollar news coming up a little bit later. So when settling down to get ready for trading, the first thing that we can do is check out investing.com. You make sure that you don't have the US dollar on holiday. Then you check the other major currency pairs and make sure they're not on holiday. Then you go ahead and you look at every single 3 bull coming out and you make a note. So for example here, this is going to be during our trading times. So we say at 10:30, Great British Pound, and we just make a note. And that means that when we're getting close to 10:30, you do not want to enter a trade. If you are already in a trade, then you want to manage it. So let's say the trade is very profitable, then you might want to move your stop loss up so you can go ahead and make sure that you don't lose money. Instead, you actually make money if it turns against you. You might also want to move your take profit further up. So if the news event works in your favor, you could earn extra money. But you certainly wouldn't want to just leave it as it is.